GM. Today's lesson is going to be about another trap that normies or dumb money fall into. And it's about the concept of money. So I talked about it in my journal, inside the channels. But I want to expand on it and explain what I mean. I've been talking a lot lately about how the only way for you to get results that are different to everybody who loses is to think differently than those people. Now, I'm not saying this is easy. Obviously, if it was easy, everyone would do it. But once you're armed with the knowledge, you can do it. So just like the average person enters along, it goes down, and they double down. I talked about that before, how that's a feeling of hope. And it's trying to avoid pain. They don't want to take the pain of a loss, so they hang on to their long in hope, even though the market is telling them that they are wrong. The market is your best friend or your worst enemy. If it tells you you're wrong, get out. That's why you have your predefined stop loss and you take your stop loss. Okay, cool. You understand that. Now, so that's one way that you can instantly think like the 10% and not think like the 90% who lose. Don't get hopeful whenever you're losing. Just admit you're losing, take the pain, get out. Second thing, money. And the whole concept of it, the whole idea of it, it's entirely backwards. The dumb money, think about money. The smart money, think about risk. What does that actually mean, though? I need to explain this. I need to expand upon it, because I know it's a difficult concept. You might think, but Michael, why would I even be trading if I didn't want to make money? I'm not saying that the goal isn't to make money. Of course, the goal is to accumulate wealth over time and make lots and lots of money and get very, very rich in the markets. Sure. The goal, though, is not the approach. Those two things are separate. They are totally separate, right? The goal, making money, is not the approach you take. So in order to actually make money as a trader, you need to not think about it in every single fucking trade. The thought of how much you're going to make, how much you could make, how much you might make, how much you didn't make the last time, how much you did make the last time, it's all going to cloud your mind and give you bad judgment. It's going to make you do irrational things like trying to make up for a loss with a bigger trade next time. Or like carrying your pain from the last trade into the next one. So you have a loser, then you have a winning trade next time, and you want to exit because you want to make back that money. It's nothing to do with that. And so I said earlier that smart money, what they focus on is keeping money. They don't focus on making money, they focus on keeping it. What does that mean? That means they focus on losing as little as possible. Now that doesn't mean that they sit and never take a trade just so that they never have to lose money. It's not about not taking risk. It's about taking low risk with tight invalidation, and when you're wrong, you're wrong, and when you're right, you are right more than you're wrong. So if you're wrong, you lose 1. If you're right, you win 3. Whatever. Doesn't have to be a fixed number. It shouldn't be a fixed number because, again, you shouldn't think about the reward. But the point is, your entire trading process should be built around one thing. How do I enter into a probable setup, right? Whether it's a trend, mean reversion, a breakout, a reversal, whatever. Doesn't matter what type of trade you do. Your one and only goal should be, how do I enter into this trade with the minimum amount of risk to produce the maximum amount of potential reward? Right? Now, as I said, you don't think about the reward beforehand, so all you can think about is the risk. And so that means waiting for your setup, trusting your process, and not listening to your monkey brain that wants to think about fear, greed, pain, discomfort, closing early, not closing, cutting. None of those things matter. They are immaterial. If it's a downtrend and price bounces in a corrective manner and you have a short system that says when price is trending down and there is a counter trend bounce, I will short if I see whatever my setup is. You want to wait and take that at the moment where it is most likely to actually play out. Note, most likely. Not guaranteed, most likely. So that you can get your trade on with a really well-defined amount of risk, as close as possible to your stop loss should be your entry, and that's it. And then you do that over and over and over and over and over again. And it doesn't matter if you're trading on a 1 minute chart or a 1 week chart. Your goal should always be to wait until you are highly confident that your setup is not that it's going to win, but that you are as close to your ideal conditions as possible. That's the benefit of having a system. That's why having a system helps. It will say entry, stop loss, take profit, sure. But it goes beyond that. It's not just about your entry. It's not just about your system. It's about your mindset, and it's more about your mindset, because when you get into the trade, that's when the real hard work starts. Once you enter the trade, you're instantly going to think, how can I get out? It's a weird psychological trick your brain will play on you. You think that when you get in, it's going to be all sunshine and rainbows. As soon as there's green P&L, cool, I'm just going to wait, and I'm going to chill, and I'm going to watch it all rack up, and I'm going to make loads of money. But when you're in a long trade, and it goes up, and you see, let's say your risk is $10, and it goes up, and suddenly you're in $20 profit. But then, as an uptrend will do, it pulls back. Suddenly you've got $10 profit. And in your brain you're like, wait a minute, I had $20 a minute ago, now I've got 10. And you're already questioning your paper profits because you're thinking about the money. You're trying to make money instead of playing your system. That's what it means. That's what the focus should be on. The focus should be just on defining your risk, finding a high probability setup, getting into it, and having an objective reason why you get out. Not because price pulled back in an uptrend, but because price did a double top. Price broke market structure. Price lost a key moving average. It actually did something that would indicate that the trend could be shifting. You fall back to the level of your systems. And then when you zoom out further than that, not talking about one trade, but talking about your whole portfolio, and everything you ever do in this market should be based around, how do I get this little ball, my little nest egg, my little ball of capital, whatever size that is, whatever amount of money is in your portfolio. How do I look after this? How do I treat this with the most respect possible? And how do I hunt for opportunities to take low risk bets? And each time you take a low risk bet, when you're wrong fast, and you don't care, you're out. And when you're right, you are right more than you're wrong, and over time your portfolio will grow. It is that simple. It's not easy because the mental tricks your brain will try to play on you, but it is that simple. It is, how do I find low risk opportunities? How do I take them? How do I take my loss when I should? And how do I let my winners, which are going to be bigger than my losers, make up for those small losses? That's the game. That's the entire thing. That's all it is. That's all it's ever been. Don't believe any of this bullshit that people tell you about high win rates or making $100 million or fucking any of this shit. You cannot project any amount of returns onto the market. You cannot tell the market where to go. The market's going to go wherever it's going to go anyway. You just jump on board with as little risk as possible and see what happens.
Cê é louco, meu Deus.